Here we are once again for a weekly close for Bitcoin. In this video, we're going to be jumping down into the key levels of what we're looking for on this weekly close. Are we going to be closing above this key level or below it? Does that mean we're bullish? Does that mean we are bearish? We'll be jumping into these macro timeframes to take a look at what's been going on with Bitcoin and what I think the most likely scenario is here for Bitcoin on the weekly timeframe. As I get into this video, if you find it useful and informative, smash that like button. I do appreciate that. If you're new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. If you haven't yet joined us in Discord, though, guys, check it out, linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there, so why not go ahead and check it out. Let's jump right down into this one, though. This will be a very familiar chart for many who are, regulars on the channel. This here is Bitcoin paired up with USDT on the 1 week chart. Binance is the data source, and we've been looking at this because it holds a lot of the key levels for us, and similar levels can be found on the monthly as well. So on here, what do we see? Starting at the very bottom, we have the low range. This is by no stretch of the imagination a guarantee that we're going to revisit this area, just an area of interest because, we kind of tested this as a previous area of support and we haven't really come back down to retest it. So if we were to break the higher levels of support, then this is the one that I think is more than likely going to hold out. But this is $6,500 to $7,600 or $6,590 to 7,681 to be more exact. And so this is the area that is very, very extremely low, right? It's not something that I think is likely at this stage to kind of be talking about, but it's something worth noting. A little bit higher than that, we have the next key level. This is $9,689. This one is an interesting zone. It's not the wick highs that I was interested in. It was actually the kind of closed position. Because this actually was the area that was kind of acting as a lot of resistance for us. We pushed through it, but we haven't again retested this area in a strong way. So I'm really interested to kind of see what price action does on the higher time frame or the higher kind of price action to see whether or not we do end up coming down towards this 9,689. It would tick a lot of people's boxes. A lot of people do speculate around $10,000, and this one would be a very interesting level to be kind of reviewing. Now, as we kind of move up a little bit higher, we end up in the more probable zones. This is the one that I was actually thinking that we were going to go down to last year, but we actually kind of stopped in a very strange place, which was 15,476. My thoughts were 11,600 to 13,948. And the reason for this is it's an area that we have not yet tested. Okay, it was resistance. We went through it. And we've never come back down to retest it and to kind of confirm that this previous area of resistance has now turned into support. So it's going to be one of those. It's an interesting level. It would actually tie up quite nicely with a Z-wave structure for Bitcoin if we were to have to come down into new lower lows, which I think, from previous videos, you guys know that that's where my mind is at, considering big money, institutional money, smart money is not coming into the space, it is only exiting the space. It's hard to think the price is going to be in a bullish market without that money kind of supporting it. Instead, it's got really weak retail money, or what they commonly know as dumb money. I don't believe retail money is dumb, but that's kind of the terminology gets thrown around. So with weak money in the space and kind of accumulating from the smart money, it does actually make me very concerned about the future of BTC. It doesn't really support that bullish narrative. Not only are volumes over 1 million short of what we were expecting from the previous bull market start, it's really, really difficult to kind of think that we are moving upwards without smart money, without volume really pushing through the markets. This is something we've been talking about for a very long time. This is nothing new, so do check out the other videos if you are of interest in those. Now, let's get back onto the topic, which of course is all about that weekly close, right? So we know our key levels, right? We know these levels are of interest to us. Now, as I kind of zoom in on our weekly areas up here, we can see that the 200 EMA, which is our white line on the chart, and this was previously acting as resistance. This area of resistance was also noted from smart money concepts between 24,316 and 25,231. Okay, so not only do we have our 200 EMA acting as resistance, which typically from a traditional financing sector would be your trend filter. Okay, so if you're below it, you're bearish. If you're above it, you're bullish. Okay, now that doesn't always translate overly very well into crypto, but typically if you're looking at Forex, it's a nice way of kind of keeping yourself on the right side of the market. Now, when we see not only do we have that kind of area from smart money concepts being a barrier, we also have our 200 EMA being a barrier. We closed above it once and then we came right the way back down again. And again, what held up more importantly was that smart money concepts of where the supply is. The supply is right up there in that $24,000 to $25,000 range. Okay, now at the bottom we do have some buyers down here at 20,892 and 21,442. This area here was previously resistance. We pushed through it. And now the supply that was over here pushing price down has now turned into demand over this side pushing price up. Whether or not we lose this is going to be something to kind of keep an eye on. In terms of our weekly position here, what are the key levels that we're looking for? Well, if we were able to, a close above the 200 EMA would be seen quite bullish again because we're dancing around this area. And it could be what the bulls need to kind of get confidence back into Bitcoin after getting hit down pretty hard recently. So that number would be $23,676, but it is an average. It does change every second, every day, right? So I'm just kind of bear that in mind. It will be looking realistically, if I were just to kind of give you a nice ballpark figure, 23,700, around there, you're going to be bullish potentially next week. Now, personally, I don't think there's going to be enough momentum in the price to do that, but I could be surprised and we could see it. Okay, so we'll keep it kind of, close to our chest, see how it kind of goes. Now, on this weekly time frame, we are heavily overbought. Okay, this doesn't last for too long, and we will be seeing reversal in the market. And if we zoom out of this, right, knowing that our weekly time frame is in a bearish state, we can see that not only we overbought, the previous times that we were overbought, we did see pretty significant retracements. So for example, we saw the FTX collapse going from overbought to oversold. Okay, we can see that in there was a 27% drop. It wasn't anything major. 27% actually isn't too bad. Now, if we were to articulate this from actually entering into the overbought area, one of the things that we did here with FTX is we actually pushed the stochastic RSI up whilst the price was going down. And so that was actually, if we were to reflect on that, it would have actually been 38% as a retracement to the downside to reflect on the fact that we were actually moving this RSI up still whilst we were pulling down. It wasn't looking overly great. Now, the time before that, we had a very, very deep retracement from the overbought to oversold. We actually had this 63% drop, okay? And that took us into the June lows. And the time before that was from all-time high down into the oversold, which was 52%. So we know that there's significant retracements that can happen from this weekly stochastic RSI being high. Okay, it's just a matter of when that happens. Now, we don't want to get ourselves confused. What's really important about the stochastic RSI is it shows you the strength of the movements. It shows us that we're exhausting the move to the upside, okay? And it doesn't really reflect on price movement. It doesn't give us like a guarantee 30, 40, 50% move to the downside. What it does tell us though is as we are moving down, which there will naturally be a correction, if this stochastic RSI moves fast to the downside, like we saw over here with FTX, and we saw that 27% move, right? It was fast going from overbought to oversold. That's a positive. Okay, yes, the price action still goes down. That's a given because you're going to have kind of have a nice healthy correction. But the faster that the stochastic goes down, basically the less strength there is in the movement to the downside. It's rapidly moved the momentum from overbought to oversold, and price action usually lags behind a tad. So essentially what we're saying here is that the stochastic RSI at the moment is indicating that we're likely to see a correction. The strength of that correction would highly depend on the demand or the supply that is pushing Bitcoin in the direction. So in this case, it'll be an excess amount of supply drowning out any demand that will pull that price to the downside. And we'll have to keep a close eye on that stochastic to see whether or not we stay bearish for a long period of time, have a 50% recorrection, 60% correction, I don't know, but we'll keep an eye on that and we'll see how it kind of goes. But a correction nonetheless is definitely due. Like I said though, with the fact that smart money is not coming in, I would be, I guess, how do I articulate it? I would be more inclined to think the price is likely to come down into the lower ranges, 11,000 to 14,000, this little yellow box area here. So from our weekly standpoint, are we going to close above 23,700? I don't think so. but the numbers are there. That would be the 200 EMA. We'd have to close above 25,211 to really break the current structure that we're in. And even then, it doesn't break the bigger macro. It only breaks the short-term view where we could be short-term bullish. And I would be even more concerned if that would happen, because it does mean that we have a much bigger correction to the upside that will allow us to then have a much bigger correction to the downside later. It's almost like you're just prolonging the inevitable. So in order for us to really get bullish about Bitcoin, I would have to see us probably move significantly higher than $35,000, which is possible, but I just can't see us really pushing through this area of resistance around 36. So, if we were to kind of push past 35, 36 would hit us down pretty hard, I would have thought. But even if we do go that high, my issue would be it would still be in a very corrective state. We haven't got a trend to the upside. And as you can kind of see, this would basically just confirm my kind of hypothesis that this is a bear market rally that's about to completely tank us down. Whereas at the moment, this down here is actually a little bit easier on the eyes and would basically mean that we'd end up with a shorter move, in my opinion, than a bigger move. So one of those, we'll have to be really, really cautious about it. Now, from a smart money concepts point of view, we can, of course, acknowledge that we have a weak high. So we are bullish on a macro scale. We can zoom out of here. All right, we're bullish on a macro scale, but on the micro side, we haven't yet finished the correction. We have the imbalance in the order books. This is created from institutional investors down here, and price will come down, in my opinion, to fill this gap. As you can kind of see, if I zoom out on this weekly chart, there are no other gaps that have not been filled. Okay, there are gaps that were left behind. I'll point out a couple right now. Okay, there was a gap here and it got filled. There was a gap here and it got filled. There was a gap coming down here and it got filled. There was a gap here, it got filled. Right, there's a gap here and it got filled. There's a gap, we'll find it. Now that one got filled, and there was a gap over here and it got filled on the way up. And then there was this gap here and it got filled. There was this gap and then it got, well, kind of filled on the way up. And then we've left the same gap behind, right? And so we got to come down essentially, right? All these gaps, these imbalances in the order books, price likes to make sure that they are validated. And basically, in a nutshell, I mean, do the course if you haven't already. Check it out, 𝗕𝗘𝗪𝗀𝗠𝗑𝗪𝗏 down in the description below. But in a nutshell, this block here, this gap that was left behind, is created from an imbalance between buyers and sellers. Okay, so here, a big buyer comes in and tries to buy Bitcoin, but there's very little selling occurring inside this range, and therefore price jumps from here to here. Right? And in doing this jump to the upside, this basically means that there were very little buying very little selling in here occurring, meaning that the person who was trying to buy a large sum of Bitcoin is now starting to pay a premium price for it. They don't like that. So what they stop buying here, okay, when they realize that there's a gap that was left behind, and they let retail investors kind of come back in and drag price back into this range so that they can continue buying. Okay, they want to be buying here. Okay, they don't want to be buying here. So when you have these imbalances, more often than not, the person who's created, or the institution that's created this area of demand, stops that demand, turns that tap off, waits for price to come back down naturally, which it does do, because it's not really driven from retail, it is driven from smart money. And then when it comes back down into this range, they then take it back up again. They are looking for the liquidity. That's what they're looking for. That's why these gaps get left behind, and essentially why these gaps end up getting filled, because it's all about the liquidity. So when we take a look at it from a smart money concepts point of view, we have to move down. This actually is a range between $17,000 and $20,000, and I think that is likely to get filled. And you can see that all other weekly gaps have been filled. This would be very unusual to leave one of these behind. So we'll keep it in mind. It's possible that it doesn't get filled for a long time. That's also possible, but it will get filled. I do have confidence in that. So from our weekly standpoint, we know the number, 23,700 approximately. It's a little bit lower than that, but that's kind of what we're looking for the bulls. And if we want to be bearish, we want to keep it below let's say we'll keep it below 23,600. We'll give that $100 buffer. We'll keep it down lower than there for the bears. But essentially, you know, it doesn't look overly great on the macro for Bitcoin, in my humble opinion. I do expect further downside. Even if this bear market rally goes up higher, it would actually just make the whole thing prolonged and just be brutal, I think, for many retail investors, which I wouldn't be surprised happen either. So I'll leave the video there. If you found it useful and informative, smash that like button. I do appreciate that. If you're new to the channel, subscribe. If you haven't yet joined us in Discord, check it out. Linked in the description below. I don't think you'll be disappointed by what you find down there. If you're looking for more from the crypto space, why not hit that join button down below and become a member? So much more happens for our members down in our Discord server. You can either do that through Patreon or here on YouTube by clicking the join button below. Until the next one, though, guys, have a fantastic day.